All right, welcome back to Dirty Boots Capital. I'm your host, Tony Lopes, and I'm excited to have Marco Santarelli here with us. Marco is an amazing guest, and we're going to get so much value out of this conversation. Marco is the founder of Norada Real Estate Investments, which is a turnkey cash flowing investment property site. So check him out there at Norada. He's also two-time Inc. 1000 entrepreneur. We were commiserating about whether he was 1000 or 1006 or Inc. 1000. That's a very impressive list to make. So two-time Inc. 1000 entrepreneur. So that's awesome. He's obviously an investor, knows all things real estate, and he's also an author. So super excited to welcome Marco Santarelli with us. Thank you for joining us, Marco.
Thank you, Tony. It's an honor to be on your show, and I'm looking forward to it.
Yeah, this is going to be a lot of fun. I love chatting with folks who are not just real estate investors like you are, like I am, but also educators, right? Your goal out there is to provide education, to provide value to folks. So, in terms of real estate, for folks who are looking to get into real estate, I hear so many woes today. Oh, the prices are too high, the interest rate too high, I can't cash flow. I mean, give us a perspective in terms of, is today still a good market to invest in real estate?
Yeah. So, wow, that's a big question, Tony. We were just touching upon this before we started recording here. One of the questions I get asked pretty frequently is, "Hey, Marco," or "Hey, fill in the blank, my team of investment counselors, is now a good time to invest in real estate?" And this is, I think, a question investors ask themselves quite frequently because they're wondering, is this the right time? We're heading to a presidential election. Mortgage rates have been going down, but now they're going back up. Is the housing market healthy? Is there too much supply, too much demand? What's the situation, right? The thing is kind of a short story long, if you will. The answer to that question, in my opinion, is always that now is always a good time and potentially the best time, but always a good time to invest in real estate. Now, here's why, because some people might be scratching their head. Well, how could that be? Interest rates were at 1.3 or 4%. Now they're at 7 plus or minus percent. Values have gone up considerably, especially in 2020 and 2021. We saw on average nationwide about a 20% rate of appreciation on residential real estate, 1 to 4 unit properties, which is insane. That's not sustainable. But it's like, okay, well, if we had a 20%-ish run up for 2 years in a row, that would imply that real estate is overvalued, overpriced, and prices are going to come down. Well, that didn't actually happen. It kind of did have a pullback, but it continues to be strong, maintain its level, and even it's still going up in many areas around the country to an average of 5%. The reason is supply and demand dynamics. But we got to step back for a moment. If you look at the United States, it's made up of over 500 metropolitan statistical areas, MSAs. That means we never talk about the country as being one housing market or one real estate market. We can't say, how's the housing market doing or how's real estate doing? Because the question becomes, what real estate market are you talking about? You got to get granular. Sometimes you got to get, into micro markets, because it's not just about the metro area or the regions within it or the submarkets. You can literally get down to the neighborhood level, because real estate markets all operate independently of each other. They all have different dynamics. They have different drivers that drive the fundamentals and demand and supply dynamics. You have to ask the question, what real estate market are we talking about, and where should I invest? This is why, if we go full circle back to the question, is now a good time to invest in real estate? I always say, yes, it is, because it's not a question of when to invest. It's a question of where should I be investing? You can always make the numbers work. You can always find deals. I mean, back in the 70s, there was a time when mortgage rates were up in the 17, 18, 19% range, and people were still buying real estate, still investing in real estate. Cash flows were different, values were different, but these are just levers that we play with in the real estate game. So long story short, it's always a good time to invest. The question is where, not when. You've got to pick the markets and micro markets that have inventory, that have good supply and demand dynamics, that make sense numerically, fundamentally. And those are all topics in and of themselves.
Yeah.
But yeah, I mean, it's to me, it's always a good time to invest in real estate.
I absolutely agree with you. Being in the business for 20 years, I've seen highs, I've seen lows, good markets, bad markets, so to speak, relative. But just today, I was speaking with an investor, and he was asking me, "Hey, is now a good time to invest in the Northeast specifically?" He's a Northeast guy, so he was asking me, "Should I invest in the Northeast?" And I had shared with him that I look at demographics, I look at a lot of statistics, just like you do, Marco, right? Just like you do, right? For your customers, your clients, you're looking at all sorts of different things. And so I shared with him, I had said, I don't particularly like investing in the Northeast because the demographics don't really support the long-term trajectory. What I mean by that is when I look at like the 10 to 15-year-old demographic, it's getting smaller. There's less and less over time 10 to 15-year-olds. And why is that important to us? Well, in 10 years, they're going to be our renters, right? And so if there's less and less of those 10 to 15-year-olds, that's mean in 10 years, I'm going to have less renters than there are today. So less demand, that's a problem. So I look at demographics for different states, Florida, different areas, but primarily Florida because we like Florida. It's growing leaps and bounds in a lot of different ways. And so I look at the demographics there, and there's a growing base of 10 to 15-year-olds. And so I shared that perspective with them, and it resonates with what you just shared. And it's an example just to really highlight what you just shared of maybe it's not a good time to buy in the Northeast because of shrinking demographics there, but it is a good time to buy in the Southeast because they're growing. So that's one thing that I share. And I'm not pushing people like you. I'm not pushing people in one direction or another. I'm just trying to educate and share with them a certain perspective, right? You talk a lot on the reasons why you're bullish to invest in today, and I'm really curious. Like, what do you see coming forward for interest rates? Are there any particular asset classes that you're super bullish on? Is it single family? Is it small multifamilies? Is it storage units? Like that sort of stuff. What do you see happening within the whole finance community? Do you think there's going to be more liquidity, more funding available for investors? Like, what do you see that makes you so bullish on real estate investing?
Well, first, let's make a comment about mortgage rates. We're hovering somewhere around, depending on what type of mortgage you're talking about and your credit scores and location, 6.5 to 7.5%. Like, I mean, that's a broad range, but that's basically the range for a 30-year fixed rate mortgage, which is the most attractive form of financing for investing in real estate because that applies to residential based real estate as defined by the lending industry, which is a 1 to 4 unit property. Beyond that, you're talking about large real estate, and it's now a commercial loan, and we have got slightly different terms and different rates. But if you take a historical average and you go back to 1972, the average rate for a mortgage has been 7.7%. In terms of numbers, we're below the historical average going back that far, the 1972. And again, don't forget, in the 70s and early 80s, we had mortgage rates like 19, even as high as 20% potentially. So in the grand scheme of things, in the big picture, we still have very attractive mortgage financing. The leverage is relatively inexpensive. So let's just keep that in mind in this conversation. I guess the rest of your question, what I see happening or coming, the reason I'm bullish on real estate is because when we talk about residential real estate, everybody needs a place to live. It's basically a fundamental necessity: food, shelter, clothing. So we all need a place to live. The question is what does the demand and supply dynamic look like? Well, we have had for years a shortage of housing units in the country overall. I'm talking about nationwide. Obviously, that's going to differ from region to region and market to market. But the reality is that we are undersupplied right now on a nationwide basis by 2.1 million units. We are underbuilt at the moment by 2.1 million housing units. That means there's enough demand out there. People are living with their mom and dad, or they're bunked up with roommates, or a new wave of buyers and renters coming out from their home because now they're graduating college, or they're moving out on their own, or they're getting married. Whatever the case is, we are undersupplied by 2.1 million units. We were expected to reach equilibrium by 2030. That doesn't look like it's going to happen. It's probably getting pushed out even further because we just have population growth around the country that is just either keeping up or exceeding the amount of housing units we can build. We have had a shortage of housing units from builders that have basically created pent-up demand for a long, long time. And so now here we are today where that trend has been increasing. The number of underbuilt units nationwide has been short year over year over year. We're now at 2.1 million. So we obviously have to catch up. Builders have been building like crazy all around the country, especially in the south, southwest, and southeast, to basically fuel and feed that demand. Even rental properties have been basically taken out of the pool of housing units. If you go back to like 2014, like 10 years ago, about 11.5% of all the housing stock was single family rental homes. The rest of them were owner occupied. But because of this shortage, this high demand for housing, many of those rental units have been pushed into the resale pool and have become now owner occupied homes and are no longer rental homes, which is a good thing for you and I as a real estate investor, because it just means that there's more demand for rental units, because there's still going to be tenants out there and renters that don't want to buy or can't buy. So now we're floating at about 10% of the housing stock in the country as rental units. 90% are owner occupied, and in that whole circle, that whole pie is too small for the size of the pie that it has to be, which is the 2.1 million more units that we need. So the trend is turning. It will turn. We'll eventually catch up at some point, and it could be in the 2030s. We'll just see. There's so many variables at play. It's the economy, politics, mortgage rates, liquidity, the job market, income as a ratio of expenses, inflation. I mean, we're talking about all kinds of factors that shift all this stuff. So again, long story short, we have a deficit. Demand is strong. It's not going to change overnight. Housing is a very slow moving asset class.
Yes,
And
it
so
is.
you can see trends and monitor trends like almost in real time. So that's what makes it pretty attractive as an investment.
Yeah, and one thing that you made me think of, I had never really thought about this before, and maybe some people would be surprised, but when you say certain housing units, like some of those single families being taken over by owner occupied, the same thing, some of those housing units that have been used historically as rentals, and I don't know what this number is, but it definitely impacts which way we go. Some of those units that have been rentals are now Airbnb short-term rentals, right? So that takes them off the table in terms of availability for people to do like a long-term rental, like a lease or something like that, because it's lucrative for the owner to do short-term rental, like with an Airbnb. Those come off the market as a long-term rental, and so that furthers the problem of having enough units, having enough stock for rentals. And I know personally, individuals, builders. Now, when I say builders, I'm not saying builders who are building a duplex or a quad or things like that. These builders are building like 500, 600 units at a time. They've been on the sidelines for the last 2 years because of inflation of material and also inflation in terms of labor costs.
Mhm.
So I know a couple of them who have just been sitting on the sideline, not building, not adding to your point, not adding to the stock of rental units that we desperately need in this country, right? You speak about this rent to income ratio, where I don't know about you. I mean, maybe you have different stats or something. I don't see wages increasing rapidly anytime soon. Do you see, you're shaking your head, so I'm taking that's probably not going to be happening.
Wages have been going up every year, but they're not going up as fast as, well, two things. Well, they weren't going up as fast as the real rate of inflation. Now, inflation has come down considerably depending on how you measure it. If you believe the government with their CPI, that's one thing. If you look at a different basket of goods and the way inflation has been measured more traditionally over the last years and decades, that's a different story. But wages have not been increasing as fast as the real rate of inflation for most things that we consider necessities like food, shelter, clothing, energy costs. Second, tied into that inflation factor is the rate of appreciation in real estate that has been growing faster than wages have. So when you look at that, it's becoming harder and harder to afford and purchase real estate. You either have to buy smaller real estate or less expensive real estate, or just not buy at all, because you just won't be able to afford it. I mean, if you're taking 30 or 40% of your income and that applies to your housing overhead, well, that number is shrinking. So that means you just either afford less or you don't afford anything at all.
Yeah.
So yeah, that's a growing problem too. Wages have not been keeping up with inflation, like especially housing inflation.
Yeah, so a lot of good reasons for folks to be invested in real estate, start their investment portfolio sooner rather than later, pushing people, so to speak, in that direction. I'm not looking for people to call me. You're not looking for people to call you. If they do, great. We're always willing to help people. but our goal is education. All the research you do, you're an expert in this field. All the research I do, I'm not going to call myself an expert, but between the two of us, we do a ton of research to understand what's happening in the real estate market. And so we see real estate is a great asset class to be in to create more wealth, to create more freedom for ourselves. I looked at your website and it was phenomenal because I saw the word freedom spread throughout there, and I'm like, I love this. I love it because really that's where it's at. More money, more money. I mean, that's great, but at the end of the day, we want freedom. We want freedom of our time to be able to go do and afford the things we love to do and spend time with family and go. It's about the freedom of things. We don't want people to get into real estate. I know you're the same way. We don't want people to get into real estate to create a second job for them. That's not what we want. We want people to have the benefits in terms of more cash flow, more freedom through real estate. Okay. So just so the listeners are clear on where we stand, I think they know where I stand because I yak about it all the time. But for those folks who are maybe listening, Marco, right? Those folks who are listening, who are like, hey, yeah, this sounds great, but how do I get started in building my real estate, right? Maybe help us understand that, whether it's a single family, whether it's a duplex. I mean, like you go through this all the time with folks that you help build a real estate portfolio with. Like, how do folks get started? How do they get the financing? How does all that work?
Well, the simple answer is you have to build a team. Obviously, you want to continually educate yourself. You should never stop learning, always be educating yourself. But you build a team, and your team, your core team is essentially the source of your deals: real estate agent, real estate broker, a turnkey property provider like our company at Norada Real Estate. Could be other investors and individuals, whatever it may be. You need a source of inventory to underwrite, analyze, and then pick and choose and put under contract. Second, you need mortgage lending options to finance those acquisitions. Those are your two key people throughout the whole process. And then you've got your property manager, which is a full service professional property management company if you're not managing the property yourself. So that's a third person on your team. And then you'll have some miscellaneous other people, could be as many as 7 other people, like potentially an asset protection attorney, potentially a tax strategist or a CPA, your tax person, other people that will be part of your team. But the first 3 are going to be your core, your critical pieces, not necessarily self-promotional thing, but with our company being a turnkey provider, a turnkey solution, we've got all those team players available. So when you're talking to our investment counselors and you're basically getting pointed in the right direction, getting your questions answered and all that stuff, we just provide you all those contacts, all those resources. We just make it very easy for you to just have everything together all at one time. And that's at no cost either. We don't charge for our service. We just provide a lot of value. We have the properties in about 20 different markets. So it's just available there for you. But to get started, you build that team and then you start working with that team and you trust that team and they help guide you along. And then top-down approach, pick the markets, pick the neighborhoods, pick the properties, analyze them, run the numbers, do your due diligence, put it under contract, continue your due diligence, get your financing going immediately at that point. And then 30, 40 days later, you're closing escrow on a property and rinse and repeat. You move on to the next one. It's not that complicated. And once you've done 2 or 3, it becomes pretty simple moving forward, pretty simple.
Yeah, I love that way, the way you outlined this because it really isn't complicated. I was able to do this while I was working a full-time job. I started with some small units, nothing big. Anybody can do it. But the thing that I love is the structure that you offer, just as you explained it. You build a team. These are the folks you need on the team. You need help? Let's help you with that, right? As opposed to if I today was going into real estate, there'd be so many things entering my mind that I would get paralyzed. And that's the last thing I want for somebody to be is paralyzed. So help break it down. And so again, for the listeners and the viewers, if this is something that you want, like just sit down with somebody who's done it. I think that's the big thing. Somebody who's done it, who has experience, who can break down this formula to say, build your team. Now that you have your team, let's look at some markets. Okay, now that we have those markets, let's run an analysis on some of those properties, right? Let me show you how to run an analysis because most people aren't going to know, right? How do I do that? How do I run the numbers? right? We hear that all the time. Run the numbers. And folks, that's just not something we don't learn this in school. Nobody is teaching us how to do this. And the 12 years of schooling I went through, plus another who knows how many of collegiate level, nobody told me, educated me on how to do this. So you get out of school, and I work with very smart people who it's never been taught to them. And it's easy to learn. You just need somebody to show you the way. And then once it's shown, like you said, it's rinse and repeat. It's pretty straightforward. And so what do you think are some of the, like, you work a lot with folks, and maybe there's some folks out there, again, who are watching or listening who maybe have some fears around this. Can you speak to maybe some of the fears you've seen enter the picture of real estate investing, Marco? Things that where people are fearful of certain things, but they can overcome those fears. Have you ever seen that with investors?
Yeah, everybody always has fears, especially if you're just getting started. It's like uncharted territory. Like, how does this work? It's a big purchase. It's 100, 200, 300, potentially even $400,000 property or more if you're going for large real estate. So yeah, I mean, if you have never done it by yourself alone or ventured out in purchasing real estate, I mean, it's not like you're purchasing a car or even a stick of gum. It's a big deal. So it makes a lot of people nervous in the beginning. They're making financial commitments for mortgage financing. There's all kinds of moving parts that they're not familiar with, working with property management. How does that work? All that kind of stuff. This is why it helps to have a competent team that you can trust around you, because they can figuratively hold your hand and walk you through the process and make sure that you're not stepping on any landmines when it comes to choosing a market, choosing a neighborhood, choosing a property, doing your analysis, having the right lending options in place, all that stuff. This is just something we've been doing day after day after day for 20 years. So for us, we eat and breathe this stuff. So when investors are calling us, it's like, hey, this is how it works. These are the steps. Here's what you do. Here's what you don't do. And we just talk them through it and walk them through it. But if you're doing it on your own, yeah, it could be nerve wracking. But yeah, getting started is always a big fear. That first deal, that second deal, that's a big fear. It gets easier as time goes on. When unknowns pop up, that's, certainly a fear. Like, oh crap, my tenant's moving out, or they damage the property, or you have a sewer backup, like what you just experienced.
Yes.
It's like crap. If no pun intended, but if you never if you never had that issue come up before, it's like, what do I do? Who do I call? Like, who are the professionals I call in? And was there damage? Well, now what do? I call the insurance company. I file a claim. Yeah, there's always going to be things that come up that will be fearful. But once you've had that experience once, twice, three times, it becomes much easier. You become seasoned and you become a smarter, better investor. So I think a lot of the fears come around like getting started and venturing out into a new path, a new market, a new asset class, a new property type, whatever.
The quicker you get over that newness, the quicker you're going to get to being comfortable. Think of it as like for folks out there who start a new job, the first day of starting that new job, you might have certain fears, certain emotion. Who am I going to chat with? Where do I go for this? Who do I sit with for lunch? I mean, whatever your fears are, right? They're real. They're real. But
Yeah.
once you get through that first day and you get those fears behind you, just get them behind you quickly. Day two, day three, so much easier, so much easier, so much more comfortable, and a lot more fun. And so that's why you and I, we love talking about real estate. We don't really get hung up on the fear component of things because we've done this a bunch of times. We're past that. I just had an investor today who is starting to do some work, and he himself didn't see his fears. It took somebody on the outside. And this is why sometimes it's good to a lot of times work with a team who is experienced and knows how to do this sort of stuff, because they may see things you don't, right?
Yeah.
So I'm chatting with him and I'm like, well, did that get done? No, it didn't. Did that get done? No, it didn't. And it's like, okay, so why are you procrastinating? Like, and we had that conversation, right? It's almost like I'm a psychologist sometimes,
Yeah.
Marco. I don't know if you feel the same thing. It's
Yeah.
kind of funny, but sometimes that's what it takes. It's like, why are you procrastinating? What's preventing you from doing that thing? Well, in some cases, some people are introverts. They don't like to pick up the phone and call people out of the blue that they don't know. It could be a lender, it could be a real estate attorney, it could be you, it could be me. They have that fear of getting over that hump. Okay, well, let's not go months with that fear, or even weeks with that fear. How do I help you? Let's make the call together and let's initiate that conversation such that when you get on the phone a second time with that person on your own, you're that much more comfortable speaking with this person. But it's these little things. Like I've had many clients who are just introverted and they're super smart, super good people, want to do the right things, but their introverted nature is holding them back. And they don't even realize it. They're just like, oh, I didn't get to it. No, it's because you don't want to pick up the phone. You don't want to go to that real estate meeting or go to that conference because it's a very uncomfortable thing for you as an introvert. You want to stay inside your shell, which I get. I'm an introvert, by the way. I'm an introvert, like off the scale. I've been tested the whole bit. Seriously, this is insider information, right? I'm like an introvert off the scale. But so me, I can see it very clearly when people aren't getting things done. But that's certainly something that you and I and others who are experienced, we can see in people. And so again, why it's super important to be working with a team.
Here's an interesting little fun fact. I don't have the statistics behind it, but there is a study behind it that applies to stock trading and whatnot. But some of the personality types that are more introverted actually are better investors than the extroverts.
Hmm.
Because they're more cerebral, they're more analytical, they're more structured and organized, and because of that, they make for better investors. They make
Hmm.
better decisions.
I did not know that. That's an excellent tidbit on introverts. I love that.
Yeah,
Yeah, they just need a push. They just need a little push, a little help to
yeah.
to talk with others.
Yeah, they just need to get out of their comfort zone and out of their shell. But when they do that, they ultimately end up making better decisions.
That's awesome. Well, Marco, I'm super excited to have you be on with us here on Dirty Boots Capital. A lot of value has been shared. I hope the folks are really soaking this up and looking at building their team, going out. If it's your first investment, reach out to folks like Marco, folks who have done it a bunch of times, people who are respected in the industry. Again, two-time Inc. 1000 entrepreneur. I mean, a very respected individual. Go take a look at his website. I'm going to put it in the description field so folks know where to click onto it. Go take a look at it. And Marco, thank you so much for being with us and sharing these points, these values with us. I super appreciate it.
Tony, it's been a pleasure. Thank you for your time today.
Excellent.